Does anyone use PayPal anymore? That is the thought that I'm getting right now when I look at PayPal's stock chart. This is the 5-minute chart. This orange area is pre-market, and then down here is market close, this blue line in this area. And from the top to the bottom, we have a 23.5% dip. We're trending below VWAP, and it looks like we found somewhat of a temporary bottom. Is this going to be the local bottom or not? That's the big question. So today, what happened, right? Earnings came out, and it was worse than expected. I would actually say when I reviewed it, it was kind of what I would expected. I think the market may have overreacted a little bit, but let's dive into the earnings, some big takeaways. There's a new CEO. We want to talk about him really quickly as well. We want to talk about the potential floor that we're seeing for this company, and where I want to, or what I'm thinking about doing going forward for our hedge fund. So let's dive into it right away. And the easiest thing to do, or what I like to do the most, is when in doubt, zoom out, right? So this is the monthly chart of PayPal. And what is super brutal about this ticker is the fact that, look at this, 10 years ago, we're basically exactly in the same place that we are now. And that is with a very consistent share count as well. So we're like exactly back to where we started. We had the whole ZERP era and online e-commerce exploding, especially in 2020. Look at this. That whole COVID move absolutely destroyed, where it went from roughly, let's see, COVID came out, I don't know, I would say something around 100 to 300, so a 3x move there, and then gave all that back. It's been consolidating here with that former CEO coming out with new products and trying to diversify the business a little bit. It looks like, there was some traction, but at the end of the day, it was losing a little bit of hope. Execution was not as quick as expected. That's what they're saying in the report. So we'll talk about all those changes because right now you would think, is this a huge buy opportunity, or is this a value trap, or is this business over? Well, I'll tell you what, it went from a growth business to a value business, and they even have a dividend now, which kind of says a lot. So let's go to the first thing, the implied doom of PayPal, because based on a DCF model, discounted cash flow, I did a little bit of math, and right now it's being calculated that the PayPal will be shrinking year over year at 9% for the next decade. So this is like beyond bullish. People are basically writing off PayPal completely. I mean, it's a $40 billion market cap, which is very, very small for a company like this based on their cash flows. So let's dive into a little bit of reality of what people were so worried about. And the fourth quarter 2025 results, you can get all these. I just took some snippets of each one for this video. We had a whole live stream where we talked about PayPal in more depth. So here's some of the highlights. What people are worried about is this branded checkout. This is like your kind of like Stripe checkout interface, and it only grew 1%. And this has people worried because this is one of their higher margin areas, and overall e-commerce is growing quite a lot, which means competitors like Google and PayPal are eating or Apple Pay and Google Pay are eating PayPal's lunch. That's what's going on. That's what has people super, super worried. Not to mention, they also came out with lower expected guidance. So 2026, slight decline. Consumer balances, roughly flat. EPS, mid to single digit decline. So just all going down. Not very exciting. Not to mention, we have Kevin Warsh coming out as the Fed chair nominee, the pick. We don't know yet if he's going to get elected. We'll see what happens. There's a whole different debate, but he is a hawk in Dove's closing. So what does that mean? It means he is most likely going to try to bring those rates down, which means these customer balances is going to earn PayPal even less money, hurting their free cash flow even more. So that's something else to consider. So what people are upset about is, first of all, this whole guidance thing, the fact that high margin businesses are not growing that quickly. Also, their low margin unbranded processing, Braintree, which is basically the back end of PayPal, is growing, but that's the low margin business. And that, along with the free profit of the bonds and the interest rates will hurt them even more. So it has kind of like macro news and micro news both hurting PayPal altogether. Now let's talk about this new CEO, because this is where things get I found it a little bit funny. I need to drink something, but I don't got anything near me right now. So Enrique Lores, CEO of Hewlett Packard, right? This is the guy who's going to be taking the helm. And oh, you guys are going to love this guy. He is famous for, you guessed it, turning printers into subscription services by selling ink, those ink cartridges. Oh God, we all love him for that. So is that good news for PayPal? Well, it kind of is, because he is a systems guy. He's good at making businesses very profitable and efficient. So in a way, that's exactly what, he's an execution guy. That's what PayPal is looking for, because their last CEO, this dude over here, Alex Chris, is not so much as a systems guy. He's more of a product guy. And this guy should probably change his status here, president and CEO of PayPal, because as of today, he is no longer the CEO of PayPal. Actually, the CEO of PayPal is the former CFO. So this lady, Jamie Miller, November 1st, 2023, was elected the CFO. And oftentimes, interim CEOs are the CFOs. It's like, if you don't know what to do in your company and you're looking for a CEO, you quickly grab the CFO. That's just like the default. Usually not a good thing, but it's interim. Okay. Anyway, she said, this is what I thought was so funny. She kind of threw this guy under the bus a little bit. In 2025, or the last CEO, she threw the last CEO under the bus here. This guy, Alex Chris. So in 2025, and again, this is one of those reports from the PayPal earnings. In 2025, PayPal delivered solid performances. Let's zoom in a little bit more. Okay. Across multiple areas of business, we grew revenue, transaction margin dollars, and earnings per share, underscoring the strength of our increasingly diversified platform. This is what Alex Chris was really good at, bringing out new products. Just is all going a little bit too slow. You'll hear that in a second. Sorry, let me get back to it. At the same time, our execution has not been where it needs to be, particularly in branded checkout. As announced, yep, that's what is that 1% growth, right? As announced today, the board's appointment of Enrique Lores as PayPal's new president and CEO reflects a clear commitment in strengthening execution, innovation, and results. We are fully aligned on the path forward as PayPal enters in its next chapter of growth. This actually makes me want to check out, let's just go to FinViz very quickly. FinViz. I think it's HPE, Hewlett Packard. Yeah, there it is. So they didn't really move much on this news that they're going to be losing their CEO. Kind of interesting. They are down about 1%. So something, food for thought. So anyway, this lady's kind of throwing in the former CEO under the bus a little bit. Hey, everything's taking a little bit too long. Now we have a new CEO. The new CEO is more of an efficiency guy. He's more of a executioner. Committed to strengthening execution, innovation, and results, blah, blah, blah. Not to mention this guy, this new CEO, let me go back here, Enrique Lores, he has been on the board for 5 years, and I think the board chair even the last year. So he knows exactly what's going on, and he'll be able to jump in pretty quickly. Now, here's why I am actually bullish on PayPal given all this commotion, because typically this doesn't look so good. I don't use PayPal as much as I used to. When I'm in Europe, people use it like crazy. When I'm in America, yeah, it's okay. I don't know. I feel like if you're on eBay, you use it. But now, things like Venmo and stuff are popping up, which again, Venmo, boom, owned by PayPal. So they did diversify pretty good, but there's just a lot of competition in that space. Has me a little bit nervous. Now this is though what I absolutely love. Let's just go to their financials, because this is actually looking pretty good. The company is planning, get this, $6 billion in share buybacks in 2026. At this crashed stock price, they could, in theory or theoretically, be buying back 12 to 15% of the entire company in 1 year. So you basically have a 10 to 15% or 12 to 15% based on the stock price at any given time. Dividend payment is ultimately what's happening. And you got that 1% dividend on top. So we're talking like, best case around 16% that the company by default from where it currently is will go up, which won't get them back to green on the day. So that's also important. But anyway, that buying hasn't started yet. It's just going to start soon. Right now, this is also pretty important to see, and I think it might even be better to go to Finviz for this one. They have a forward PE of 8.6, guys. That is very, very low. For context, the average S&P 500 company trades at 21x, at 21 PE, and right now the Schiller, my God, this is really crazy. The PE of the overall index here is at 39. Schiller PE. The market is very, very expensive. We were making this post on a former stream, but I wanted to share this. This is actually a screenshot from our hedge fund pitch deck because we're talking about index investing and how right now it is a very dangerous time to be index investing, but that is a whole different video. So let me get back to the topic at hand, which is the PE ratio. So very, very cheap company. Let's keep going. Here's something else I love about PayPal right now that makes me pretty bullish, and it makes me feel like there's a bit of a floor in PayPal, and I don't think it can really go that much lower unless there's just like latent fear and people getting stopped out, maybe some institutions having to sell, because this is pretty crazy. Maybe it's just a lot of stop losses coming off today. Where is it? We have, I think I just scrolled over it twice. So the revenue, annual revenue is constantly increasing. That's what I like to see. It is not aggressively increasing like a growth stock, but it is overall increasing. And again, it's more of a value play at this point. And what I wanted to show was the fact that they have short term, here it is, around $6 billion of cash on hand. Actually, it's closer to $5 billion, and they have $6 billion in free cash flows. Here it is. Let's go to annual. That's why I couldn't find it. So a lot of cash on hand. They have that debt, but there's no solvency risk. This company is not going to go bankrupt anytime soon. So the fact that it's down 20% today is a little bit surprising, I got to say. That is way too much. So it's basically valued at pre-COVID levels, but with a lot more revenue. It's just not growing as quickly anymore. And that's what I call the growth stock, to turning from a growth stock to a value stock has its pains. I guess it's growing pains, I guess you can call them. But at this point, there's so much bad news out on this stock. But I kind of feel like it's all out, unless I'm totally missing something. So I feel like any good news might send this stock rallying at least 10-20%. And there's no solvency risk. So it's a pretty safe bet from here, especially with those share buybacks. That's really what I like to see. And if you go to the statements and you go to the income statement and you scroll down, it's usually near the bottom. Check this out. And actually, let's go to annual. Average basic shares outstanding. So we started at 1.2 billion back in 2016, that 10 years ago, and now we're at 103, and this will be under a billion shares with that buyback program. So guys, this is cheaper than it was in 2016 with less shares. It's kind of crazy. So I feel like it's a good buy, even with management being all over the place, because at this point, you can't really do much worse, right? Everything is priced in, and that makes me overall pretty bullish. And we all know the famous quote from Warren Buffett: be fearful when others are greedy, be greedy when others are fearful. And I think that's probably pretty good advice for PayPal right now. Leave your comments and thoughts below.